Hello, friends. Welcome to Equity Alpha weekly report. Today is week 2 of January 2025. So, yeah, let's join me. So, first of all, disclaimer whatever information I am providing over here should not be meant as a financial advice, investment advice, or a trading advice. All opinions expressed over here are personal, and you should not take any sort of position based on this information because this is just for learning purpose. Okay. So in this weekly report today we will see different indices, majorly Indian index and US indices view. For breadth, we will definitely check long term, short term, and advanced decline. We will also see macros. Mostly we are tracking FMCG volume growth, GDP growth, and foreign direct investment, that is FDI, which is positive for now. And overall, I can see that mostly things are negative, and we will see in which sense they are completely negative. We will also look into a US market key major indices that are recently turned bearish, and it is very important to track US market because it's mother of all market. It's a gigantic market, and compared to India it is very big market, right? So we will definitely look into US market as well. So let's start. So with recent indices in our Indian indices, if you can see Nifty, next 50, mid cap, small cap, macro cap, in weekly everything got hammered down. On a monthly turned red, 3 month turned red. From 52-week high, almost at max it's down to 17%. So our major key indices are down in a correction mode, I can say. Let's look at the sector-wise performance on a weekly basis. So mostly it was down. The only thing I can see the flat was oil and gas, diamond jewelry, and insurance. Other than that, if you can see, banks are 4.33% down, diversified 7%, power 7%, trading 7%. Heavyweights, in case on a heavyweight, you can see that FMCG is holding a bit, software services is doing good, telecom, that's fine, right? On a weekly basis, it's mixed. On a 3 month, you can see that everything, mostly every sector is looking bearish, considering banks, healthcare, FMCG, finance, infrastructure, metal. Software services surprisingly doing good. I'm not sure why, because I do not find reason. I just see what is happening. I do not try to find the reason. On a yearly basis, on a long term, I can see that still major indices are looking good, FMCG, and this is the past performance. There is no guarantee in future it will improve or continue like this, but this is the past, right? So we will have to check the past, and we will continue looking into the present, that what is happening, right? So in the past year what has happened, now what is happening, so you can correlate those things. For FII-DII data, from last few weeks, I can see that FII both were bullish. Now suddenly FII have moved to a very, very bearish stance. You can see that 27,000 crore net sales. And in the last 2 week, in last 1 week, you can see 16,000 crore net purchase, right? On a DII level, you can see that they have purchased of 30,000 crore and 21,000 crore respectively within 2 weeks and 1 week of span. So from DIA perspective, it looks like bullish. From FI perspective, it looks like bearish, right? On a market breadth, a short-term market breadth completely turned negative. Last week we saw that it was around over here, right? It was mixed, but now it is completely negative. So short term breadth is negative. On a long term basis also it was kind of a flat over here, but now it is completely on a negative side. So long term and short term both market breadths are negative. Advanced decline ratio, again, it tried to rally last week, but it just completely failed with Nifty failed at 23,500. So overall advanced decline ratio trend is also down, so that is absolutely bearish. Now let's look at the macros. Basically macros help you understand in which direction or in which sectors we are having a kind of potential opportunities are coming. So if you can see over here, credit to MSME outstanding, so these are basically loans taken by MSME which have not completely paid out. So if you can see that earlier it was 21.6, now it has decreased. So it looks like, I mean, there are positives and negatives for both these as well. So currently outstanding is basically 12.8. Another factor over here, we can see that in macros is the fertilizers. So fertilizers trend is increasing. So that is also one sector we can look into. Production of the cement, that is also increasing. You can see from 3.3 to 13 point, right? So that is one sector we can look into. Electricity has point has increased from 0.6 to 3.8. So that's what we can see into the industry macros. And we will now see on a demand macros, a GST collection slightly on a lower side, but it's fine, it happens. We cannot see any kind of a stability over here. Overall it looks good on a demand basis. You can see that the airline traffic, right, on a domestic airline traffic has increased. So airline companies should do well in this area. Passenger car, absolutely on a negative basis. So there is some stress in automobile, you can say. Two wheeler is also kind of a down into this. Now let's go to GDP and trade. So GDP is still obviously lacking growth. Volume FMCG growth, that is also lacking. That is the reason we in the last week report we also discussed that FMCG companies are having a very bad time ahead. And for investors this is good time, basically, to be very honest. For investors, you can look into the high quality companies in FMCG sector to give at least 30 to 40% gain from going onwards. Market mood index for trader, it is kind of a bad. For investors it is good, and this is the time you can look for very small amount of your corpus you can try to deploy, and gradually you can deploy while the pessimism is there in traders or investors, right? Okay, I think it's done. If you have any questions, you can raise out on my YouTube channel's comment section. And yeah, if you like the content, you do subscribe, like the videos, and please let me know if you want to see such videos further. Okay, now let's look at the indices and charts, right? Okay, so first of all, we will go with US market. So in US market, you can see over here for IT, I usually look for Accenture. Uh, a large cup and handle pattern was forming, but it has very high volatility and it has just rejected from this line. And also it is not good. So obviously the market turned bearish and the overall condition is also not good, and the stock is also IT sector giant. So we can probably gauge about the IT sector from this. And I have a different market breadth indices set up over here for US market basically. So if you can see over here, these are the US market breadth indicators. In Indian market, there are no such breadth indicators like this, but since US market is mature, they do have a breadth indicator. Like if you can see Russell 3000 stocks above about 200 moving average, right? So it basically says that the all the Russell 2000 stocks, right, from those almost 40-45% of stocks are actually below 200 day moving average, right? So and this is the equilibrium, if you can see. So whenever this ratio comes to 50%, it usually bounce back, right? And over here it just uh, it just moves around 50%, it suddenly drops, right? It What does it mean? It means that only now 40 to 45% of stocks are above the 200 moving average, right? So the same way we can see that uh, all the stocks, overall stocks, how much percent of those stocks are above 200 day moving average. So here the number is negative, and the same way we have 50 moving average, right? So in the indices, let's see in which index. I think obviously it's overall, right? So overall stocks, if you can see percentage of stocks above 50 day average, right? So almost only 28% of stocks are above 50 day moving average. So you can see that extreme bearishness is appearing over here. Now let's see S&P 500 index, right? So uh, here is the index for S&P 500 stocks. So out of 500 stocks, almost 48% stocks are 200 day moving at the 200 day moving average, right? So they are also almost on a equilibrium area, and there is a good chance that it can go down, right? So and overall, if you can see over here, the minus 35% decline in a single day, so that's very huge loss of the breadth, right? So it means that no stocks are actually participating in the rally. Almost all majority of stocks are going down, and they are in a below 50 day average or above 50 day average. And one more surprising thing, I can see that the US oil, right? So that is indicating something is happening in Middle East, right? So trying to increase the price. So currently you can see that 3% increase in a single day. It's a very huge movement. So there is something is happening. We do not know, and we also do not try to find the reason. That's it. And on a currency level, you can see that currency is US currency dollar index, that is also trying to become very strong, right? So currently, if you can see, it has rallied almost 9%, almost 9% in a single swing. So that's huge. So compare to every other currency, that is the currency US dollar is very strong, and other currencies are getting weaker and weaker. And also one more surprising thing I can see over here in bond market. So short-term bond yields are shoot up. I mean, have shoot up 2.74% in a single day. So this is very much concerning that with increasing bond yields, investors will move towards bond market and try to buy bonds by selling the stocks. After that, on a indices basis, if you can see that the even also we are checking the China index, a large cap index, that is on a downtrend. Okay, then we have a Dow Jones Industrial Average that has already broken the support. S&P 500 It is also, testing the support but trying to sustain. Russia small cap, it is also down. Nasdaq 100 technology ETF, that is also almost testing the support. And on a commodity, we can see that the natural gas is going well. Silver, silver has already tested the support. It is going up now. Gold, obviously, with this fear scenario, it will try to go up because there will be a lot of demand for safe haven asset classes. Okay, now let's go with Indian indices and Nifty, the most popular indices of India. uh, yeah, so Nifty has actually tested support which was previously held, but it has now closed below those important support. So Nifty is actually creating lower highs and lower lows. Once it breaks this level, that, let me check what is that level. I think, yeah, it is already taken. Yeah, that's 23,276. If it broke that level, if it breaks this level, then it is very difficult to sustain the market. That is what we can see, and obviously this is prediction. We can go wrong. That is nothing new into that. Overall market, Nifty 500, it just tested the support with 200. That is the convergence area. Price, horizontal line support, moving average support, everything together, area of convergence. It took a little bit of support but just rejected at the 50 moving average, and now it is heading down. Basically, I also can see a small inverse head and shoulder over here. This one is head, sorry, this one is head, this shoulder, and another shoulder. And one of the important uh, characteristics of the inverse head and shoulder is that the head will be slightly higher than this right shoulder, right, and that considers as a extreme bearishness. So let's see how it pans, but overall, to me it looks very, very negative. Nifty junior completely closed below the support. Mid cap, it was sustaining at 50 day, 200 day, but has just completely closed below uh, 200 day, and it was a really very bad close. Completely, flush out all the uh, gains, right? So Nifty small cap, the same story, just broke below 200. Micro cap holding a bit, but still you can see that it looks like a rounding top. But let's see how it goes. FMCG, it is holding a bit, but see how it performs further. But if it breaks this support, then it is very difficult to sustain over here. Auto likely to go down. Bank Nifty extremely bearish, just close below the horizontal area. Metal close below support. Realty testing the support. Finance close below support. Pharma is holding a bit. If you can create a trend line over here, pharma is basically holding good, and let's see how it pans out. Healthcare is also holding a bit. Consumption almost down. IT is looking really strong. So what one thing I actually learned in my recent endeavors, that if a general market is down but one sector is holding high, then it has a immense potential when general market is going up further. So IT is looking good now. Public sector completely down. MNC testing the support. Media completely down. Infra testing the support. Energy, just look at the down size, 23%, almost in a bear market, right? PSU Bank, today it closed below the support. And commodities, same story. Service sector just testing 200 support. So out of all the indices, if you can see, 2 or 3 indices are performing, everything else is going down. So at the moment, for investors, yeah, it is a good opportunity, but we cannot invest everything at once, right? So we will do some kind of a partition in our capital, let's say 1:4, 1:5, and then we, every 3 to 4% decline of the index, we will allocate some capitals into different asset classes, right? For stocks, I did not find anything substantial to that is going up, but few stocks which I am just looking into it. Those are, the first one is Gargi Fashion Jewelry. It is holding right. Overall fundamental is improving, holding very on a very right basis and right strength. So I would consider it as a good pick. For Amber, I did have some swing positions over here. It worked well. I just got out with profit, and just I did not take further positions. Overall fundamental is looking improved, and on a breakout of this line, I will definitely buy more. Another stock is associated alcohol and breweries. It is also a good strength stock. Fundamentals are improving. You can see that squeeze momentum is on a higher side. It just took support and going higher. So this is also one minor swing trading positions, and we can put a projection as well, that how much is the probability for the gain over here. So we probably 10 to 15% probability it's already there. I'm sorry. Okay, so we already have a project over there. 15% gain is possible. So I think, yeah, that's it for today's weekly report. Overall market is absolutely negative. There is no chance to swing over here. So as a swing trader, I am just waiting, trying to sharpen my chart reading skills, reading books. Yeah, and that's it. If you like the video, hit the subscribe button and like. Yeah, thank you so much for the day.